Ladies and gentlemen, good day and welcome to the Gujarat Narmada Valley Fertilizers and Chemicals Limited, GNFC, Investors Concall meet to discuss the financial performance for Q2 FY2023-24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitesh Waghela from Anurag Services LLP. Thank you, and over to you, sir.
Thank you and good afternoon. Welcome to the Q2 FY2023-24 earnings conference call of Gujarat Narmada Valley Fertilizers and Chemicals Limited, hosted by Anurag Services LLP. From the management, we have Mr. D.V. Parikh, Executive Director and CFO, Mr. Y.N. Patel, Head of Operations and Maintenance, Mr. A. Sisa, General Manager and Company Secretary, and other senior members from the management. I would like to thank the management for giving us the opportunity to host this call. We will begin the call with opening remarks from the management, post which we will have a question and answer session. Thank you, and over to you, sir.
Good afternoon, and thank you for holding this call. We welcome all the analysts and investors to this call on the Q2 performance of GNFC. We'll first begin with the overall environment in which we are working, and thereafter we'll touch upon the operational and financial highlights thereof. And this will be followed by some discussion on certain announcement which we have made. So to start with the overall environment, as far as fertilizers and chemicals segments are concerned, they continue to be under margin pressure across India as well as outside. Chemical sector scenario outside also is very challenging in terms of the margin pressures. You see in Q2, there is a good volume performance, but that is far offset by the margin pressures on account of the realizations which we are receiving on the output fronts. On the operational part, Q2, there was no shutdown or any other outages by and large, whereas Q1 it was an annual shutdown. Last year, the figures are without any shutdown. So H1 and QOQ are really not comparable. However, the plants have run fairly well wherever the economics have made the sense. Coming to the very same operational part on the projects fronts, the concentrated nitric acid with 50,000 metric ton of capacity has been commercialized sometime in July. And the progress on cogeneration power plant at Dahej is on, which is an investment of roughly 630 crore. Rest of the updates on the projects and strategy side will be covered by our colleague, Mr. Y.N. Patel, with the analyst. As far as financial performance is concerned, like this quarter, although the profit relatively has gone up as compared to the previous quarter, the previous quarter was impacted from a volume perspective. When we compare H1 as well as YOY Q2, the margin pressure is clearly appearing. We have shared the investors' presentation also with everybody, and it is uploaded on the website. Both on H1 and QOQ as well as YOY basis, it is the same situation, and the drops are very sharp when it comes to chemical. When it comes to fertilizer business, as you know, we have two products where one of them is a complex fertilizer, and government subsidies have continuously reduced on account of those subsidies, and therefore the business is becoming more challenging, and there our losses have also increased in case of fertilizer, mainly because of the subsidy impact. On a full year basis, that is YTD H1 basis, since there was a shutdown, the urea energy norms were also higher as compared to the last year. And on a net basis, we are still higher than the threshold which is there. So we will say that this is a fair performance as compared to what's going on in the market. because of the combination of various factors and the kind of product portfolio we have. As far as TDI is concerned, TDI too ran well and with quite sort of reliability. The H1 production numbers have been encouraging. We produced close to around 27,000 metric ton in H1 TDI2. So that's an encouraging sign. And that has reduced the TDI losses from close to 180 crores to 95 crores in H1 so far. Coming back to the announcement which company has made, it's already now in the public domain. Company is purchasing back its shares at the rate of rupees 770, which is roughly a 10% premium over the recent prices. And if we see the price of 21st of October, the premium works out to around 17%. We understand that the margin that is the premium should increase over a period of time. And let's see how it settles as far as market price versus the offer price is concerned. So with this, I conclude my opening remarks and leave the floor open for any question answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Hemang Kotadia from Anvil Research. Please go ahead.
I'm Nirav here from Anvil Research. So, sir, 2-3 questions from my side. So, one is on the ammonia production which we have clocked in H1 of FY24 through the oil route. So, if you can just walk us through that, how much of the ammonia we have produced through the oil route, and let's say if we consider last year, how much of the oil we would have bought from the outside market so that we could produce those ammonia for the chemicals that we produce.
I'm Yogesh Patel answering your question. This ammonia plant, if we talk up to October, we have already produced 345,000 metric ton of ammonia. Out of this, the gas-based ammonia is 202,000, and the rest of is, oil-based ammonia.
Okay. And sir, how much the raw material is required to produce the ammonia through the oil route?
The oil route consumption is varies around 0.72.
0.772.
Yeah.
0.75. It ranges between 0.720 to 0.735.
Okay.
Per
metric ton of
oil, per metric ton of ammonia.
Finished good. Yeah. So, sir, why do we choose to produce ammonia through this route? Does there is a substantial difference between the cost of production of ammonia from the oil route as well as the gas route? Because with the gas prices also now coming down, doesn't it make sense to produce the ammonia for the chemicals through the gas route, or the plant is such that we can only produce ammonia for the chemicals through the oil route only?
Yes, I'm Devi Parikh. Actually, it's the way plant is set up. Okay. The gas-based ammonia plant is exclusively meant or dedicated for urea only.
Okay.
And the other one can only manufacture through the oil route.
Okay. But sir, if we see the players globally or the players outside India who are producing, let's say, acetic acid or ethyl acetate from ammonia, generally they may be using gas for their ammonia production. So at some point of time, does it give us an advantage in terms of our ammonia coming at a lower cost, and that gives us some sort of leeway in terms of margins when we compare those players outside India who produce ammonia through the gas route and hence producing those downstream products?
Okay. I'm Devi Parikh answering your question. See, there are varying dynamics between oil and gas over a period of time. Changing feedstock is not an easy decision. Okay. It requires time, it requires investment. At the end of the day, in spite of that, what happens when we compare about the landed cost, as we know, if you refer to the PPAC website, we are a net importer of both gas and oil substantially. Okay. So what happens is, even if somebody is using outside because of the closer availability and lower cost, end of the day when you import, it comes at a market price and dynamics keep on varying. So therefore, we choose to keep oil as a means of producing ammonia, point number one. Point number two, when you use oil, it is more rich in terms of hydrocarbons and therefore it supports various chemical streams. If you use gas, then there could be some issues in terms of matching those frequencies or requirements of various types of gases. So basically, it's a techno-commercial issue because of which we are continuing with the oil-based ammonia production. I will request my colleague, Mr. Vayan Patel, who is from a technical side, to explain.
See, I'm Vayan Patel. Right now, we can augment production of oil-based ammonia to a larger extent, but we cannot increase, our design of, our plant setup. Both the ammonia, gas-based and oil-based ammonia is such that we cannot modify our gasification unit, basically, which is supplying this oil-based ammonia. So we have to go for major modification if we want to convert it into 100% gas-based facility. So that is right now in this existing setup, it is not possible. And secondly, we have certain advantages, as Mr. Parikh has pointed out, that when we do gasification of oil, we are along with the hydrogen for syngas production of ammonia, we are getting CO and other composition which is useful us in producing industrial chemicals. That is formic acid, acetic acid, TDI, etc. So right now we are better position and we don't have any intention to modify our existing design of ammonia plant.
Got it. And so this oil is similar to the fuel oil prices which we generally get in the market, or it is something different what we use which comes from the refinery?
It is related to it is related to crude oil index. Some index we follow.
Okay.
So based on that formula, price varies.
So is it possible to quantify the cost of fuel oil which we would have incurred in quarter 2 as well as in 1H of FY24?
Yes, we can give that. Offline you can ask us and we can give further details about this.
Fine.
The only to respond to your question, see the normal oil and this oil is somewhat different in terms of the sulfur content.
Okay.
What we use is a lower sulfur content oil and therefore we pay some premium. And this is how the pricing formula is designed with the supplier.
Got it. So my second question is on technical grade urea. So I believe that's a non-regulated product, correct me if I'm wrong. But when we see our total urea production of, let's say, close to 8.5 lakh tons, if you can let us know what's the production as well as the sales for technical grade urea, and if you can talk something about the contribution to the EBITDA in FY23 as well as in 1H of FY24, because I guess with the increase in the prices of urea in the international market, we also do increase the prices of technical grade urea. So if you can just talk about that product in a bit, that would be very helpful.
See, regarding production part, I will cover. Out of around 8,50,000 we produce, we are bound to supply minimum 6,36,900 to DOF. That will be, made for neem-based urea, neem-coated urea. That is a fertilizer grade urea. Balance, we can, divert it to technical grade urea. But normally we give some commitment slightly on higher side, so 6,40,000, 6,50,000, depending on, our budget in the initial period. and balance we take it to technical grade urea. Now the contribution part,
Market. Okay. See, okay. First, we touch the financial part. Like we make it clear every time that product-wise contribution levels is not something which we discuss outside of the company. Okay. So,
but is it a deregulated product where
it's a fact? It's a deregulated product, and nowadays what government has done is it has also designed a separate HS code under which the imports are being reported. So since last few months, the imports, if you see the data which is available on the Department of Commerce website, it is reported separately for technical grade urea. Okay. And it is showing up what's therefore the market size. It is much more than what used to be earlier.
Correct. And the usage is similar? It is sold to the farmers only, or does it have any other uses apart?
It has multiple uses, which I will request our marketing head, Mr. Manish Upadhyay, to talk about that. Application of DG.
Manish Upadhyay. Major application is for DF manufacturing. Our product is suitable to DF manufacturing. So the DF manufacturing, diesel exhaust fluid, is called as a DF. DF market is increasing. So it is being used for regulating the NOx content, NOx emission from the diesel vehicles. Okay. So now it has started and it is growing by almost 20-25% every year. And we expect that this demand will continue, and demand is definitely going up. And total last year we also sold almost 196,000 ton material where production was there. And this year also we are going to sizable quantity will be selling, maybe around 1.8 to around 2 lakh ton we will likely to sell the product.
Technical grade urea, right?
Technical urea, and this will be definitely. And second use is plywood industry, laminate industries, some chemical industries. These people are using CPC manufacturing. There is dye intermediate product. Cattle feed also they are using.
Correct.
Almost all dairies are using for cattle feed manufacturing.
Got it, sir. So I have a few more questions, but I'll join back in the queue.
Okay, thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Arushi Shah from Sushil Finance. Please go ahead.
Hello. Hello?
Yes, please go ahead.
Yeah, so just one question. When I see our spreads in our, in our presentation, just wanted to understand, for this, the benzene and aniline spreads, they've been around 66 and around the lowest levels in the September month. Is it a kind of seasonality which we impacted by?
We lost you, madam, in last couple of sentences. Not.
Hello, better now?
Yeah, clear.
Yeah. So, in terms of benzene and aniline, if you see the feedstock spreads, we've touched the lowest in the month of September. So, do we get impacted by certain kind of seasonality or something? That is why the spreads are lowest there. Is it something like that?
So spreads are lower because of the margin pressure. It is one of the lowest in our presentation, which is sent out.
Correct.
Okay. That is the spread between benzene and aniline. Another spread which is also one of the lowest is that of the toluene TDI.
Correct.
As far as aniline benzene aspects are concerned about the spreads and what impacts the margin profile, Mr. Manish Upadhyay will talk about it as to what is the scenario in case of aniline on the market front.
Correct.
Manish Upadhyay.
Yeah.
Aniline largely is being exported from the China, and China is very aggressive. Consumption in China is very less now. It is reduced now, and when they produce less MDI, TDI is aniline is being used to manufacture MDI.
Okay.
And when MDI production is less, they start dumping nearby areas. So India is one of the destination to sell the product, and we are one of the largest consumer of the aniline in this area, surrounding area. So they export to India at very cheap rate, and we have to compete them. It's difficult because their raw material cost is very less. The gas price is high, their coal price is low. So compared to the Indian prices, so very difficult to compete them. But still, we are able to compete comfortably.
Okay. Okay, sir. Thank you. That was really helpful. So one more question. Our year-on-year, our revenue has reduced, and there is a huge jump in other income. Any one-offs in the other income? And the other part of the question would be, what have we really done something so differently that our margins have come in so much better? And henceforth, what do we plan to do differently, to recover those margins and our revenue and go back to what our vision is? If you could elaborate on an overall standpoint. Hello?
Yes, ma'am.
Yeah.
So, couple of things we have understood that in case of aniline, which she was asking about aniline, I lost because of the
Other things.
Other income. Yes, yes.
Other income.
Other income, there are no one-offs. The other income has increased because of primarily two reasons.
Okay.
We hold several investments where the dividend payout has been significantly higher. As compared to last year of 10 crore, we have received around 29 crore as dividend income.
Okay.
Second most is the interest on the various deposits we hold. With the internal accruals coming, there is a sizable deposit which has increased the interest portion of it. So therefore, there is an increase in the other income. There is nothing which is one-timer in nature in the other income. Now, regarding your question of what we are doing to recover and all, see, we respond to the market realities and by configuring our actions, including the production mix, etc. So this is what at company level we do for responding to the challenges of various products.
Okay. So, any guidance where we can see a recovery coming back on track, like if not numbers, like in terms of a timeline, that, when can we really see our volume growth not being, set off by our margin pressures?
Then that's a price scenario. It will be very difficult to predict the price scenario. As far as volume scenario is concerned, our O&M head colleague would throw some better light on both the operations.
Yes, please.
See, operation side, we are, already doing, very good. And the capacity-wise, we don't have any margin, to compensate what we are, losing on valuation side. So, there is no asset, there is no, loss of production on at present on any technical, visible things. So our volumes will remain, at same level, and there is no scope that we can increase volume, without any project, installation or conceiving any production. So right now, this volume will remain same, and we are already operating at very high level.
Okay, sir. And so, sir, do we have any capex plans as we've even undertaken a buyback? So, would that impact our, cash flows? Would that plummet our cash flows? And in a way, do we have less capex plan? If you could shed some light in the coming years.
These are the considerations which are already factored in while declaring the size of the buyback. As to what is the current capex, what is the future capex, and what will be the requirement for the operating cash. So these are the deliberations which have already happened yesterday, and after that the announcement of around 652.81 crore is made.
Okay. So any number in terms of the capex for coming year?
Yes, that our colleague from business strategy will respond on this.
See, we have already outlined a capex of 4,800 in the next 5 years.
Okay.
4,800 crores.
Okay, sir. And that can be more or less, equivalently distributed, or do we have some big plans in short term or a long term?
If you want, roundabout figures, current year will be planning for around 200 crore. Next year will be 700 crore. Then around 1,500 crore in 24-25, 25-26, and 26-27.
Okay,
so
okay.
Tentative distribution.
Okay, sir. Okay, thank you so much and best of luck. Thank you.
Madam, if you would have referred the presentation, it is already part of it.
The capex figure?
Yes.
Okay.
Along
so
with the timeline.
Yeah, so timeline was there, but I wasn't really able to find the capex amount, so that is the reason I asked. Yeah, thank you so much.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Jainam Gagyani from Swan Investments. Please go ahead.
Hi, sir. Thanks a lot for this opportunity. So, sir, I just had one question. So, have we taken the provision for the reduction in subsidy? And if so, what is the amount that would be affected? Thank you.
Okay. See, the subsidy reduction is on account of two parts. One is urea and second is the complex fertilizer. One that has affected is that of a complex fertilizer, which is the ammonium nitrophosphate in our case. The impact is around 85 crores in the books of account because of the change in the subsidy rates as compared to the previous corresponding period.
Okay. So that would be, so have you accounted for that in this quarter or will that come in quarter 3?
No, it's already accounted for. See, what happens is when we are expecting some reduction, normally we make a provision based on the estimates given by marketing. It so happened that whatever was announced was very close to what was given by way of a provision, so it is already factored.
Okay. Thanks a lot. Thank you, sir, and wishing the whole team a happy Diwali in advance. Thank you.
Happy Diwali to you.
Thank you. Participants who wish to ask questions may please press star and 1. The next question is from the line of Hemang Kotadia from Anvil Research. Please go ahead.
Yes, sir. Thanks for the opportunity again, Nirav here. Sir, to the previous participant's question on 85 crores of subsidy provision. So, this was in H1 of FY24, which we have provided, right?
It's not the provision of 85. It's a differential additional loss which we have taken on account of subsidy over this period of H1.
Correct. So, sir, if we see on a normalized basis, excluding all this provisions and everything, or the one-time hit which we have to take because of the reduction in the NBS rates by the government, and because for urea our energy consumptions are slightly higher, what sort of sustainable run rate of profit or loss could happen for the fertilizer division on a quarterly basis if we take the situation as it is from currently?
It is not that straight to understand because let's understand the complex fertilizer, okay? Yeah. Apart from the rates of subsidy, there are input parameters like weak nitric acid, ammonia, etc. So there is an interplay of more than one factor which will affect, and therefore one cannot predict that what will happen to the fertilizer segment on a standalone basis, because it will all depend with the moving parts floating around as to where it settles from period to period. As far as urea is concerned, yes, we can say that urea is not going to be profitable anytime soon because of the under recoveries, mainly of the fixed cost and energy.
Correct. What is that amount, if you can quantify, sir? What amount of extra under absorption we undergo every quarter because of which the urea business is under pressure?
Okay. See, energy norms under recovery depends upon the prices of gas. Okay.
Correct.
Like in Q1, we lost close to around 30 crore or so in the energy norms because of the shutdown. The norms were very higher. in Q2 the norms have been quite lower, so it has caught up. So the loss has reduced to around 7 crore. As far as fixed costs under recoveries are concerned, see, we get roughly 2,629 rupees on a per metric ton basis in case of urea. And we spend close to rupees 1,000 more on the various fixed cost in case of urea. So that's the impact. And if we see, we manufacture roughly 6,40,000, little above, taking the figure little above the reassessed capacity. And that's a number which will continue to occur regularly till the time fixed costs are revised by the
government.
Yes.
Correct.
For all this.
Yeah. Sir, second question is on the concentrated nitric acid. So, if we see Indian market, I think we are the predominant player after Deepak Fertilizers. So, if you can just help us understand like the pricing, how the pricing of CNA is done by us. So, is it ammonia plus some premium of ammonia and a fixed margin to produce CNA, or CNA prices are more dependent upon the market dynamics in India, because CNA cannot be imported in India? So
normally it is market driven. However, for a limited time we do a fixed price contract also, depending upon the situations.
Okay. So there probably the volatility in terms of margins could be more when because prices of CNA have corrected a bit as compared to that of last year. So there the volatility in margins which we have seen in our numbers also could be one of the reason could be this also, where because we sell in the spot market, we do suffer when the prices moves down substantially.
That is true for any product.
Correct. Sir, if you can, sir, you mentioned about the TDI part, that TDI2 we have produced close to 27,000 tons in H1. I think Q1 we had some sort of shutdown at our complex. So if you can share the production numbers in Q2 and how do we see TDI1 and TDI2 for FY24? Because last year, if I'm not wrong, we have produced close to 56,000 tons. So if you can share this, and then I have one more associated question to this.
See, I'm Mayan Patel answering your question. See, TDI1 so far we have already produced 10,000 up to October 23. And TDI2 also we have produced 31,000. Yeah. And right now capacity utilization is, first time, we are operating at higher level than 100%, throughout this, first and second quarter. The shutdown which you are talking, it was for, Bharuch complex for TDI1. TDI2 was, running at least, not a, plant shutdown was there. There were certain unplanned shutdown were there, but right now both TDI1 and TDI2 are running very nicely, and capacity utilization of TDI1 is 124 around. But this outlook for TDI2 production scenario for this current year is very good. So we have achieved that stability.
Correct, and that's why probably our losses have reduced. If we compare H2 versus H1 versus H1 of last year.
Yeah.
So, if you can share the fixed cost which we incur for TDI2 plant, because I think that's the higher proportion of the entire volume. So, what is the annual level of fixed cost we incur for our TDI2 plant?
See, this was already covered in the last Concall, but for your purpose, roughly it is about 50,000 rupees per metric ton. Okay. And if we talk about the annual number, it will be close to around 300 crores.
Got it,
for the H plant.
Got it. Sir, last question is on ammonium nitrate. So, what we could hear is that the government have lifted some restrictions on the export of ammonium nitrate, which they have imposed at the start of the year. So, if you can share the scenario of ammonium nitrate currently, and how is we placed in terms of the H1 performance for ammonium nitrate, some sort of understanding there.
Yes, from marketing side, this question will be covered.
I'm Manish Upadhyay. Ammonium nitrate in India, there is a short supply. Rather, short supply means India is in need of the ammonium nitrate. Ammonium nitrate is being used for manufacture of the explosives, commercial explosive, and it is mainly used by the Coal India. There is a net import around 2 or 3 lakhs rupees, 3 lakh ton material every year. Some small quantity, a special grade product is being sold by the fertilizer in market. But otherwise, market is growing because Coal India is consumption is increasing, and market is growing.
Correct.
Thank you.
Mr. Patil, if you can, sir, is it not? So I can understand that it is not possible to share product-wise details. But let's say if we take H1 of FY24, if you can just list in order of contribution, which products would have contributed better in terms of the profitability from the chemical division. Top 3-4 could help, sir.
Acetic acid.
Okay.
Acid.
Okay.
In terms of profit per unit, I'm saying.
Yeah.
Okay.
And
nitric acid.
Okay.
These are the 3 products which contributed. As far as TDI is concerned, it has contributed to positive contribution as against negative contribution last year.
Okay.
And therefore reduced the losses.
Correct.
Although we are still not in profit in TDI too, but it has substantially reduced the losses because of this.
Got it, sir. Got it. Thank you so much, sir, for answering the questions in detail, and festival wishes to the entire team of GNFC.
Same to you.
Thank you. Participants who wish to ask questions may please press star and 1. The next question is from the line of Priyans, an individual investor. Please go ahead.
Yeah, first of all, thanks for the board for the approving the buyback. But I just could see that in the buyback announcement, it is not mentioned, nowhere it's mentioned that whether the promoter companies are going to participate in the buyback or not. It is established practice that whenever any company announce buyback, they categorically mention that yes, that the promoter have expressed their willingness to participate in the buyback. So, shall we assume that the promoter companies will not participate in this buyback?
Okay. Your understanding is partially correct in terms of normally what is the practice. We cannot answer whether promoters will participate or not at this point in time. It will be part of the public announcement which will be made. And every company works in this way. At the time of making the public announcement only, after the board meeting takes place, there is a scheduled time of making the public announcement. And in that public announcement, the total shareholding, cost thereof, and the participation intent, if any, is mentioned. This is true across India.
No, sir.
And no company mentions at the time of intimating the board decision.
No, sir, this is not true. Since this subject is already it's part of agenda, so promoter company already knows, and we can share you n number of announcements after approval of board meeting where it is mentioned that the promoter have expressed their intention to participate in this one. So this is number 1. So and number 2, currently considering this, for example, this raw material prices and our product prices, how is the business going on in, say, for example, October, November month vis-a-vis the Q2 September?
Yeah, I'm Ashwin Shah, Company Secretary. Replying to the first part of your query, in fact, the statutory requirement is to publish the public announcement. T+2 is the deadline. So, companies which receive the confirmation or consent for participation in the buyback process from the promoters, they can make such announcement upfront also. while filing their outcome proceedings of the board meeting. In our case, we are in the process of getting the final consent from the promoters to, as regards the consent to participate in the process. So, we intend to publish the public announcement in the newspapers tomorrow. So, it will be available in the public domain about the intent of the promoters to participate or otherwise in the buyback process.
No, first of all, let me say, let me compliment you for the logical answer instead of vehemently refusing. Thank you so much, number one. So while you will be publishing public announcement, maybe you will be announcing in your local newspaper and so on. So we will not have access to that one. So I'm sure that you will also be submitting a copy of the announcement to the stock exchange so that the public at large can just browse and see it.
Yes, it will be published in one English national level English language newspaper, one national level Hindi language newspaper, and one local newspaper of Bharuch. And it will be also uploaded on the stock exchange websites wherever shares are listed, that is BSE and National Stock Exchange. Great. And also on the company's website, right?
Yeah, great.
So it will be available in public domain. Yes.
My second question is that, with regard to this policy announced by Gujarat government during sometime in April or sometime this year, early this year. So now we have given a handsome dividend of 30 rupees per share, and now we announce this buyback. So after these two major steps, how much COPS is still lying, which has to be further utilized within this financial year, for example, either in terms of bonus or dividend, whatever?
We understand you intend to know the cash which would be lying.
No, sir, case, no. Since you are you are a company promoted by Gujarat government. So Gujarat government has announced a policy for the distribution of surplus funds or whatever retained earnings. So I think I don't remember the number, but 70% something they announced that company has to pay back a certain portion of their retained earning either by of dividend, buyback, bonus, whatever. So now, after that policy, the company has given 30 rupees dividend, which was, first time such a high dividend. And then now it is a buyback. So what I'm asking that whatever was your obligation to distribute to the shareholders from the retained earning as per the Gujarat government policy, out of this, how much has been consumed by the dividend of 30 rupees? We generally suppose we give you a dividend of 10 rupees, so this was additional dividend of 20 rupees, for example. And how much will be consumed by this one buyback, and what will be the remaining portion which the company has to still distribute to the shareholders?
Okay. I am D.V. Parikh answering your question. On account of dividend, the total outgo is 466 crores.
Mm-hmm.
As far as buyback value is concerned, value is already part of the public announcement, 6.81 crores.
Yes.
Now, remaining amount is not exclusively meant for the other options. Remaining amount is meant for the expenditure pipeline, capital expenditure pipeline, meeting some of the requirements for challenging times, working capital needs, and so on. So it is not that whatever kit is there is available for rest of the options.
Yeah, I'm Ashwin Shah. I would like to just supplement what Dilip Bhai has said. That first of all, I would like to just clarify that there was a guideline issued to all the companies promoted by Government of Gujarat, and there is no policy as such. Let us be very clear. And that as per that guideline, the companies are expected, not directed, companies are expected to act depending upon the host of internal and external factors in which the company and the environment in which each company is operating. And as you know, the government has promoted the companies in various sectors like chemicals, fertilizers, then energy, right? So nothing is mandated. It is at the option of the company, depending upon host of circumstances and the factors. I think
so. Yes, sir. So, sir, thank you for the clarification. But we are public shareholders, and we do not have the access to the raw document of the PDF or whatever government regulated. So maybe I will request the secretary to send a copy of the notification which is issued by the government. I will request. But in the meantime, we have access only to the financial newspaper. So I'm just reading from Money Control. It says that the state government of Gujarat has mandated a minimum of 30% of net profit or 5% of net worth, whichever is higher, to be a minimum level of dividend declared for the shareholders. It says like this. So we at public understand that it's a mandated, and it says then Gujarat announced a new policy of dividend on bonus shares. It says policy. And it says that the Gujarat government recently announced policy for minimum dividend distribution of bonus. Therefore, state public administration also gives greater clarity to minority shareholders and will improve the firm's attractiveness for the investors also. Besides, the directive will force the state PSU to put their idle cash to good use. They did. And
Sorry, please continue.
Yeah. So yes, and then it says that the state government has mandated a minimum of 30% net profit or 5% net profit, whichever is higher, to be a minimum level of dividend declared for shareholders. However, it has been mentioned in the order that this is the only minimum level, and maximum permissible level of dividend should be declared. So what you are saying, sir, and what is available in the Money Control is totally contradicting, sir. Sorry to say this one.
Okay, I'm Ashwin Shah, answering to your point.
Yeah.
That in fact we do not know where from Money Control has got the information. Point number one. Point number two, we have not and we cannot share this circular to any of the stakeholders, because it is an internal circular issued by the government of Gujarat to its companies promoted over a period of time. So the authenticity we do not know, but as such the intention of the government of Gujarat is to, with a positive note and positive intention, the government expects the companies to give a good return to the shareholders, to also ensure that the activities and the corporate actions are done in such a way that the shareholders' wealth improves over a period of time. That is what our perception is.
Okay.
Thank you.
So coming to this other question, that considering the prices of raw material during this Q2 and currently, and considering the prices of, for example, the product which we manufacture during Q2 and now, how do we see the scenario that? Are we positive or are we negative during the current quarter?
Okay, I'm Devi Parikh. As far as volume is concerned, it is stable. Prices, as far as volume part is concerned, it is stable.
Okay. It is packed. No, sir, your word is missing. So far, volume is concerned, it is
stable. It is normal.
Yeah. Stable. Okay. And prices, there are no there are ups and downs, but no major corrections which we have witnessed. Okay. And this keeps on changing from period to period, day to day. So making a prognostic for the whole period is not right when it comes to price. Volume part, our head of O&M has already explained that there are no practically issues from the plant side, operation side.
Mm-hmm. And these raw material prices have softened or are stable?
As compared to last year, softened, yes.
No, Q2 September.
As compared to Q2, more or less same.
And did we take any price hike from October 1 till now for any product?
Output product?
Did we take any hike in the prices of any of our product from October 1st till now?
Output product?
Did we take any hike? Did we increase the price of any of our product from October 1st till now?
So we want to clarify, is it output product or input you are asking?
No, sir. I am saying the price of a finished product.
This is what I am saying. Output product is finished product.
Output finished product. I'm saying.
Our marketing colleague will answer that.
Please, sir.
Manish Upadhyay speaking.
Ji, what is it?
No, so not increase in any product so far because raw material price has gone down and we have kept our price almost either steady or slightly in reduction side.
Okay, sir. Thank you, sir. Thank you. Jai Sri Ram.
Thank you. The next question is from the line of Arushi Shah from Sushil Finance. Please go ahead.
Yeah, am I audible?
Yes, please.
Yeah, thank you for the follow-up opportunity. Just one question. Could you give any idea regarding the asset turnover we are looking at? Asset turnover ratios.
Asset turnover ratio.
Yeah.
So last year, it is already in the annual report.
Okay.
This year, it's going to be little less than that, depending upon how we fare in terms of the revenue side.
Mm-hmm. So once all our capex plans they start coming into play, like say from FY2025-24, can we see an increase in the turnover, and if from what, if you could guide a timeline if possible?
What kind of timeline you present?
So in case we, as you said, we might take a dip in the asset turnover in the current year. So when can we start seeing the improvement in the gross asset turnover or a net asset turnover, as you would, say FY26 or 27? If briefly, if you could give some color on that.
Things forecasting the marketing projections. So, okay, I'll request our marketing colleague to tell us the scenario up to FY26-27. Normally, in a chemical sector, it is difficult, but let's see.
Manish Upadhyay. Normal chemical market is normally growing.
Okay.
Normally growing. Of course, it all depends on the raw material price. So how price is going to behave depends on the raw material prices. Mm-hmm. So it's not difficult to predict at the moment that how will be the scenario.
Okay.
Yeah.
Okay. So no, my question basically was that once we place, our new expansion plans in place, once they are in place and our revenue starts to increase, from when can we see such an improvement? Optimistically from say FY26-27 or 4-5 years hence is what my question is.
So effectively you are asking about the project revenue when they start coming in?
Yes. And the peak revenues they can reach, yes.
Yeah, it will be, beyond 26 only, we will be seeing that, real increase in revenue.
Okay, sir. That is helpful. Thank you, sir, and happy Diwali.
Yeah, happy Diwali to you. Thank you.
Thank you. The next question is from the line of Jigar Shroff from Financial Research Technologies. Please go ahead.
Thank you for taking my question. I missed the capex plans. You said it's 4,800 crores for the next 5 years. What was the year-wise breakup? You said FY24 current year 200, FY25 700. After that I missed. If you could please repeat.
Subsequently it is 1,500 and 1,200 you can say. These are tentative figures.
Okay, but this is for all the 4 megawatt solar power plant till the ammonia expansion which is mentioned in the presentation, correct?
Yeah, that also include, our project for which, bidding is going on. That is, weak nitric acid 3 and ANML 2. And also, we have
that is there in the presentation.
Pardon?
That is there in the presentation.
Yeah.
So it's the ongoing project is 4 megawatt solar power plant, coal-based cement power plant TDI 1-2, then 10 megawatt electrolyzer-based green hydrogen project, weak nitric acid, ammonium nitrate prints, and ammonia expansion. These 6 projects, correct?
Yeah.
And so the real impact of the increase in revenue will be only from FY27 or FY28-29 according to you?
Beyond 26 you will be able to see.
Beyond 26, so from FY27?
Yeah.
Okay, sir. Thank you so much, sir. Thank you. That's all from my side.
Thank you. The next question is from the line of Omkar Kamtekar from Bonanza Portfolio. Please go ahead.
Thank you for taking my question. Sir, first question is with respect to the spreads. So the spreads have been... hello? Am I audible?
Yes, clearly, yes.
So with respect to the spreads across the products, say for example, TDI is on one of the lowest ones, and the methanol and acetic acid is at the highest one of the highest ones. So will these spreads remain volatile? So for example, methanol acetic acid has more than doubled over the last 3 months. So the acetic acid prices also have been very volatile. So is this sustainable, or it will go back to normalized levels?
I'm Manish Upadhyay from marketing. Normally, raw material cost is different, and finished product price is also different. Spread sometime may go narrow down, or sometime it may increase also, decrease also. It all depends on the volume of the import, because all products, more or less, we are competing with the import.
Okay, so it will be as dynamic as it is. So we might see a drop maybe in the next quarter or
we are hopeful that normally this, whatever the ratio we have seen at moment, definitely likely to be maintained.
Okay.
Or it may improve also.
Okay.
Because this year, this particular financial first half year is not very encouraging. This scenario can be improved.
Okay. And one of the earlier participants had asked a question with respect to CNA and how its market dynamics are. So my question is on a similar line with respect to the entire product portfolio. So during the first half and especially in quarter one, we saw a lot of impact from the China dumping, China being aggressive in its pricing of its products. So it seems that it has receded to a certain degree. But I would like to get a sense from you, are we still facing it at a substantial level, and will it continue or will it recede further?
There are chances of the improvement, because first half, there was a hit because of the low price of the urea, low price of the ammonia for the world. So they made this ammonia is the main raw material for the CNA. So CNA price and nitric acid price was on lower side. It has already started improving, and we are hopeful that it will likely to go up now.
Okay, so by improving, you mean the market dynamics will improve in our favor and not that the China dumping will work?
Price will definitely like to improve.
So it will be favorable for us.
Maybe short term, maybe not improving, but if you see the second half totally, so there are a possibility of the improvement because of the improvement in the ammonia price internationally.
Okay, so that would be kind of favorable in our favors also.
Yeah.
Okay. And with respect to the oil price also, I think it was explained, but I did not understand properly. So the gasification of the oil, the oil-based gas that we produce of ammonia, how is that priced? I was not able to understand that logic properly. It's not proper crude oil on the normal oil. So how is that?
Okay. See, we source a differently valuated kind of an oil, known as FOHV. It's a variant of an oil with a different sulfur content. And therefore, the pricing formula is configured accordingly and with some premium over the normal oil.
Okay, so that is because of the sulfur content, or is it something else?
Mainly sulfur content, tailor-made to a requirement.
Okay. And because we are also using that gas, it is I heard late right. Correct me if I'm wrong. This also helps us in other chemistries also, in industrial chemistries, because the output byproducts are also used in other chemicals.
Yes, this is how it is configured.
Okay, so going on, we would be trying to shift towards that and move away from the gas-based. Will that be prudent?
We have two independent facilities. Gas-based is meant for exclusively urea, and the rest is for chemicals and complex fertilizer both.
Okay. So it will be case-specific, use-specific.
See, the ratio will remain same. There won't be any change.
Okay.
Our plants are designed like that,
Okay. Thank you. That's it from me.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to Mr. D.V. Parekh for closing comments. Over to you, sir.
Yeah, I'm Ashwin Shah, Company Secretary. I would like to extend our sincere thanks from GNFC management side for all the participants who actively participated and made this Concall meet of the investors a success. Also, we extend our sincere thanks to Anurag Services LLP for arranging this Concall meet with investors to have exchange of information and get idea about the scenario about working of the company. I also personally thank the representatives from the management, various verticals, head of the departments, for actively participating and nicely responding to the queries raised by the investors. Thank you one and all.
Thank you. On behalf of GNFC, that concludes this conference. Thank you for joining us. You may now disconnect your lines.